All right, I almost forgot to get that started. So we're actually talking about cost clarity that converts. So how we can use the math behind buyer scenario transactions to actually help grow our pipeline. And I've hinted on this a time or two, but never dove like super deep into it. And you know what? I'm totally lying. So I just looked at this and I have the wrong class. That is for tonight. Hold on, I'm getting ahead of myself.
Because
Don't
I
get
was
mad at
like,
me.
oh no, I thought we was doing some buyer stuff today.
We
But
are. Don't even get mad at me. Hold on. It's because I had people on the phone talking to me before I got in here and I have all of the documents. See, there's literally, here we go. You guys are allowed to yell at me because coach has a day sometimes. So we are doing the financials made simple. And then tonight we're going to dig into the math behind that stuff. So just tonight is when your questions become a little bit more relevant. But let's dig into here. So this is mastering every single document for the buyer side. So today and tonight is all about buyers, right? From pre-approval to Alta. So we're going to get into why this matters. And obviously, 88% of buyers purchase through an agent or broker, showing that they are trusting your professional guidance. Imagine someone trusting you with one, 200, 300, 400, 500,000, $1 million transaction, and you really are not confident about the documents you're using, the math behind it, and you are winging it. Imagine. It happens every day, don't get me wrong, especially those agents that never have coaching or mentorship or anything, right? And then out of that 88, 91, almost 100% of people say they would use their agent again or recommend them. So that means you being trusted really matters. Let me tell you the funniest thing about this 91% saying they would use their agent again. Do you know why the majority of them don't use their agent? I'll like give you bonus brownie points in my realm if you tell me why this is would and not do use their agent. Don't be shy.
They just don't ask to get used again.
Yeah, you guys don't follow up. Your funds are in your follow up and nobody follows up. Stephanie said it right. Exactly. Sorry, I'm bad about the chat, right? Agents don't follow up. So 91% of buyers, of clients say, we would love to use our agent again. You want to know why? Because if they had a pleasurable, smooth transaction, you've now built trust. So if you don't follow up with your people after they've closed with you, you're throwing money out the door and you're throwing all that time you spent and that trust that you've started to build out the window and you're not using it as leverage to grow your pipeline, right? So being educated on all these docs and the math behind these transactions that we're going to do today and tonight is what's going to help build your confidence and your ability to keep these referrals, right? Buyer agency agreement. It is our written contract that establishes the agent-client relationship, and it's super important. It does matter, but also it's required. It is required to solidify that contractual relationship, that um, legal, like legality and financial fiduciary duty that you have with a client. Without an agency agreement for a tenant, a buyer, without a listing agreement signed for a seller, there is no relationship. They don't owe you anything and you don't owe them anything either, right? Because it's a two-way street. It's a mutually beneficial agreement. It's not one-sided, right? So it outlines your duties and your compensation. It creates that legal representation, and it's also mandatory, right? And it starts with clarity to avoid confusion later. Back in the day, they used to refer to some verbal agreements, or they would say it was on a gentleman's handshake. And then, do you know back then when they used gentleman handshakes for agreements, they also had these things called duels, where two men lined up back to back, took a couple paces, turned around and shot each other because their gentleman handshake that was not in writing and not clearly defined caused a lot of confusion, right? So that's why we need this stuff on paper. We're not really officially dueling anymore. I mean, we are shooting each other in the streets on a daily basis, but it's not a formal way to resolve conflict anymore, right? So let's get into it. The key sections of it, brokerage and agent info. Some of you guys, when you're sending docs for me to review, you leave all the client information blank as if you want them to fill it out. And this is like the first and most easiest way to start providing white glove, excellent customer service is by you making the forms as easy as possible. So if the information is not personal of theirs and they're only privy to, or something they need to make a decision on, meaning it's their name, phone number, email address for a house, etc., you should fill that out for them. So then when it comes to me, I realize that you understand the doc and you filled it out. You're not just leaving it blank because you don't know, because I don't know, because it's coming via DocuSign, right? So you need to fill that out. The scope of your representation, you have options for how you're going to represent them, your commission terms, the duration of this agreement, also their obligations and disclosures, so information they need from you. So I'm going to actually pull up an example buyer agency agreement. One moment. Right, let me share. And I am using, I think this is the Delaware one. It is. This is the Delaware one. So those of you in Pennsylvania, you're used to me using PA docs all the time, and I'm trying to show love to our other agents. The premise and the idea is the same, but here we said buyer's information at the top. We get into here, in consideration of services to be performed by Keller Williams and Power, hereinafter referred to as broker, buyer appoints broker as buyer's exclusive agent. You guys are in the chat. Yes, as well. Just we are, Massachusetts has reciprocity, but we don't have a broker in Massachusetts, but you can get a license and get another broker up there. Buyer in locating for purchase acceptable real estate within the counties of, and I usually put any DE county because there's only 3 and Delaware is extremely small, as indicated by buyer signing an offer to purchase agreement, option, exchange, lease, or trade that is accepted by a seller. So what did we just define there? We just talked about it in the slide. What part of the agreement do we just define?
Roles and responsibility.
Part of it, yep. Like we are establishing what they are expecting of us, right? And then we get into a little more, the effect of exclusive buyer agency agreement. This is saying that this agreement is exclusive. So when they sign this, they are saying they are only going to work with you, right? The duration of any contract is super important. It cannot be indefinitely or into perpetuity, right? Courts don't really ever even uphold those when they are written weird like that. So you have to have duration. In Pennsylvania, you can pick when it's going to start and when it's going to end. So let's say you're getting something signed for a future date of services to start for whatever reason. In Delaware, it starts as soon as it's signed, and you have to pick your termination date. When it comes to tenant agency agreements, those can usually be shorter. Most of the time, tenants have a very definitive timeline for when they need to move. Buyers, it could take long, depending on their budget, the area, the type of housing, their personal taste, essentially how picky they are. You know, that could take some time. So for me, in my personal real estate business, tenant agency agreements, I don't care if they're like for 30 days, because the goal is to get them leased up, right? When it comes to buyers, I will not sign a buyer agency agreement for like less than 6 months. Not for your typical primary residence searching. Will it always take 6 months? No. But I don't want that pressure of having 90 days, not knowing you that well yet, and how fast you're gonna and how decisive you're gonna be, or if you have like a tight budget, if you will. And I know it's gonna be difficult. We're probably gonna get some offers rejected. I'm not stressing myself out in 90 days. I need at least 6 months to do a good job for you. And that's how you have that conversation. If somebody's like, well, I just want to do 30 days at a time, I can't do much for you in 30 days. Right? So, in order to do a good job, I need to know that I have a commitment from you of at least this 6 months. Like some people put a year. That's on you. There's no right or wrong per se. It's what you feel comfortable with, but you have to think big picture and think of be a business owner in that moment, right? Brokers' reputations and services, and this gets into that. This also refers back to the CIS and or consumer notice. Now here we get into the money, brokerage fee. This trips you up. You have to read these. In Pennsylvania, it's broken down in like 3 little sections like this based on if they're represented or not, and flat fee. In the Delaware one, you're going to put your percentage that you would like to get paid of the sales price. And this is a big or. Some of you guys get tripped up and stick the flat fee here. And what you're essentially saying is, I'll take 3%, or I'll also take whatever your flat fee is, 375, 475, 499. And so if you were to close and it was wrong and you left it like that, your buyer could say, oh, well, I'm only going to pay you $499 because it was this or that. And you meant to say this, and then you should have at the bottom of this said, and a flat fee of $499 in the other section. We get to it, right? This tells you when the terms and the payment become due in 4A. 4B is the brokerage fee shall also be due and payable if buyers enters into an agreement of sale for property located within the counties above within 30 days after termination of this agreement, provided the property was introduced to the buyer by the broker or other cooperating brokers during the term of this agreement. So let's say you're working and you have this 6-month buyer agency agreement. And let's say they were so picky and they couldn't make up their mind and you never put any offers, but you showed them 20 houses, right? And let's say that one of the houses that you showed during that 6-month agreement, you find out that they ended up getting under contract with another agent, another buyer's representative, right? They blamed you for their indecisiveness, but they went back to a house you showed them and you find out you have this agreement. If they get under contract within 30 days from the end date, from the termination date right here of this agreement, then you can still go collect your commission. Will you probably end up in civil court over it? Yes. But if they're respectable, they might actually make good on the contract they signed. But you have a right to go after your money to get paid. Antoinette, you had your hand up.
Oh yeah, I was going to put it in the chat. Back to the flat fee. We only charge a flat fee if we're like established, right?
You have to be able, so when you charge a flat fee, one, in Pennsylvania, it is a common practice, so it doesn't throw a potential client off. Like that's something that most agents do. I will tell you, what I tell you guys is that if you are not providing white glove extra services, it's hard to justify what this flat fee is for. When you charge $375, $475, $499, it's very justifiable because you say $100 is my brokerage transaction fee and $375 is going to transaction conveyancing or coordination, right? So these are fees that are pass-through fees. You're not necessarily just holding on to their money. Maybe you get the little bit that's a difference. There are some agents and some teams that charge $1,000, $1,200 as a flat fee. If I were a consumer, I would say, well, what exactly is this flat fee covering? So if they told me $100 transaction fee and $375 for transaction coordination, I'd be like, okay, so $475 of this $1,000 fee are going to pay for services you need to do your job. That makes sense. That's, cost of services provided, right? But all that other flat fee is just extra commission because what are you doing? Am I having like the most elite and love and warm and just awesome transactional experience with you outside of what I could get with any other agent? So you have to be able to give your value propositions and justify what you're charging and what it's for. What are they receiving? Does that make sense? Because you already have the commission percentage, right? So what is this flat fee for? And most of you on this screen are here still trying to nail down your value propositions and speak confidently about why you deserve the percentage commission. So it's going to be even more difficult to do a flat fee if you don't have this established, you don't have your systems in place, you don't know what you're actually providing for that extra fee. Does that make sense?
Mm-hmm.
Okay. All right. And so it is imperative that you go through whatever state agency agreements that you have and go through all of these terms or whatever, right? And then obviously it needs to get signed. And then I have an example. This is an example of one from the state of Georgia. The reason why I'm showing you different states, even if you're not licensed there, is because they're all have the same premise. This is also why it's so important to read every line of every document that you're expecting your clients to sign, because you need to know what it's saying. You need to know what the terms are. So that they ask you questions, or if they have an issue with payment or this or that, you can stand 10 toes down in your value propositions and your explanation. Charlie, your hand's up.
Yes. Hey, Tess. Hey, everyone.
Hello.
I wanted to ask, where does the um your compensation come from with when on this side? Like when you're doing, I know that you ask the tenant listing agent, are they cooperating with agents, but how does it work when you're working with buyers? Who tells you your split, I should say, or your percentage? I'm sorry, I might
The
not be
same.
explaining.
It's the same. It's the same. So you can either get paid from a concession being provided by the seller, which was established in the listing agreement. When the listing agent had that listing agreement signed, it's broken down in there how much they're asking for and if they're providing a cooperating broker compensation or not. Right? So the same as with the rental listings. When you call listings and say, hey, are you providing tenant agency compensation? They say yes or no. It's the same on the buy side. And so what the tenant agency agreement and the buyer agency agreement have the same effect. They say, okay, Mr. Client, Mrs. Client, uh, if the landlord and or seller is not providing a concession to pay me for my services, then this document says this is what my fees are, and then we will need, you will be responsible for paying. On tenant agency and buyer agency agreements, the amount that you put on there and that they sign is the maximum you can charge. However, it's negotiable to lower it. So let's say you are showing a house and you call and the listing agent and the seller are being a little stingy and they're not providing buyer agency compensation at all. And so you have to go back to your buyer and say, hey, for this particular listing, we can submit an offer and do everything you need to do, but they are not providing compensation. So we need to review the buyer agency compensation because we'll have to work this into your closing costs because they're going to have to pay. And maybe you already know because you saw their pre-approval and you spoke to the lender like a good agent and this buyer's budget is tight. So you're going to talk to the lender and say, is there any way we can work my commission fee into their financing? If that's an option, that's wonderful. But you're able to negotiate so that they can still afford you. You can still get paid something, even if they can't afford the full 3% or 2% or whatever it is. Maybe you come up with a flat fee so that at least you're getting paid for some of the services you provided. Because you have to make that decision, like, do I want to cost this person their house or do I want to lose the sale in its entirety because I'm not going to get paid exactly what I want, or am I going to concede so I can have a happy client, still make some money, and it's a win-win-win. Does that make sense, Charlie?
It does. Do
Okay.
you have like a video already put together, like before, explaining like before we get to this buyer agency part?
Oh,
Like
there's a
I know.
ton.
Okay.
There's a ton, especially in the end of 2024 and early 2025, Charlie, because that's when that NAR settlement happened. And it changed all of our documentation and it made us have to be more astute in these conversations. There are a ton, and some of them are masked under making sure you get paid. If you see a class that's like, how do you get paid? That's exactly what we're talking about.
Okay.
Okay. So
Thank
here's a Maryland agreement. And again, I just wanted to show you that it doesn't matter what it looks like. All of those elements are going to be in here no matter what state. And you're going to have to fill this out and go over it with your buyers or your tenants to get under contract, right? And here's Jersey. I know I have Jersey in the house, right? Also, if you are a Penzi agent and you look at all these other forms, you should be more appreciative because I oversee transactions in like 8 different states now, and Pennsylvania is by far, even though we have more liability, the forms are my favorite. They're the most easy, self-explanatory and like easier to explain to the client. They're more user-friendly. The rest of the states are you gotta be like a lawyer, right? And they're long, they have a lot of extra disclosures. Look at Jersey. Jersey's looks like an agreement of sale. And then now we're at Pennsylvania, right? See how clean? This makes it exclusive or not. Here's your start and end time, right? Your fees. Makes sense. And in Pennsylvania or any of the states, if you're one of my agents, I put language in here to help you overcome those barriers, Charlie, when having the conversation. So it's built in for you when you use the templates, right? All right.
Yes.
All right. Let me pull up, go back to the presentation. You know
Toss, I
what?
have a question while you're pulling that up.
Go ahead.
Do you charge or have your team charge everybody like the same price, or does it depend
You
on
have
the
to.
company?
You have to, because if you get caught charging different types of people different prices, you can get in big trouble. So this is part of when I'm always hounding into you guys. You have to have a system. You have to have a system. It needs to be written down. You need to follow the same system. So the French fries always taste the same, just like McDonald's. That's part of that. You have to, why did that happen? You have to treat everyone similarly as possible. You can't charge different people different prices. It will make you look like you're being, discriminatory or playing favorites in certain areas. You know what I mean? So it's really important that you do that. Right. So we
Right,
talked.
but you want us to figure that out on our own. You don't want to say, you guys should charge this, and the third. That's something that we have to put together in our business.
Exactly. Like
As a
it's
team.
like I would if you owned a restaurant, Charlie, and I came in and order food, I wouldn't tell you what you should be charging for the food. I don't know how much it cost you. And I don't know how to value that. It's the same. That's what it was what Antoinette just asked me. She said we shouldn't be charging that fee unless we're established, right? What Antoinette was remembering is hearing me say, don't go charging some crazy high fee and you can't substantiate your service behind that, right?
Right.
Because like I said, you guys are already in a space where you are learning how to explain or what's the word I'm looking for? Yeah, explain or like stand 10 toes down in the value you can provide as a real estate agent. And you guys are still learning how to be the most valuable agent you can be. So when you get into what are we charging, you need to take that into consideration because also right now, like, I consider you guys, you have like baby agents, teenager agents, and full grown adult agents, right? What are you going to grow into? If you start off charging astronomical fees for your services, you're not giving yourself any room to go because you're going to plateau. Right?
Mm-hmm.
Okay.
Can
But
it
with these
vary by
buyer,
listing?
Oh, sorry. What'd you say?
Can the
with these,
percentage of the commission vary by listing? Sorry, Charlie.
If it's like by price point, but again, if you're gonna have like these varied commissions, you need to have the criteria and the who, what, why, where, when, and how in writing. Because if you ever get called into like a ethics committee situation or a hearing, and they're saying, "Oh, Hannah Brady has, discriminatory business practices. She charged John only 4% to put his commission up, but she's charging us 6%." And you need to have that justified in your business practice and in a written system as to why you're doing that. Does that make sense?
Yeah, that makes sense. Thank
Okay.
you.
Yep. So the next doc, after you establish your relationship with your client and you have the buyer agency, you consumer notice them, you went through a couple other things, you gave them lead-based paint disclosure for your protection, get a home inspection. Maybe you had them fill out a BFI if you're in Pennsylvania. The other states don't have that. We got all those consultation docs done. So the next step for them to be able to go house shopping with you is to get pre-approved or provide a proof of funds, right? So what's a pre-approval? They put in an application with one of our favorite mortgage brokers or their bank, God forbid, and they evaluated that buyer's creditworthiness, their income, all the things, right? And said, okay, John Doe buyer, you're pre-approved for up to 300,000 to purchase a house, right? Makes sense? And we know the difference between a pre-approval and pre-qualification at this point, correct? And we want that pre-approval. We're not discount or budget real estate agents here at Keller Williams and Power. If you're on this screen right now, you're not a budget agent, so we're not going to behave that way. Okay. This is not Target or even Walmart. We are the Nordstroms and the Saks Fifth. That's what we're aspiring to be, a real estate agent. So we're not doing pre-qualifications and we're not showing houses to people that don't have money, meaning they need a pre-approval or proof of funds, right? We're not running around all over these mean streets of Philly, right? Okay. So why does that matter outside of not wanting to waste your time? Can we submit an offer without proof of funds by our buyer? No, we cannot,
No.
right? Right. So mortgage pre-qualification that we just talked about, which we don't want, is a quick check. Do you know how you get a mortgage pre-qualification at most banks? If you had an account there for a long time, you can literally walk in and say, "Hey, John, Mr. Banker, I want to go house shopping. Can I get a pre-approval?" And they're going to say, "Yeah, 1 second. What's your social security number?" And they're going to pull up your credit. And if your credit is good, then they're going to look at your deposits or your monthly gross receipts for your bank account, and they're going to make a real quick say, "Oh yeah, you make $5,000-6,000 a month. Your credit is 740. We'll give you $400,000." They have no idea if you can actually afford that $400,000 house because they don't know what your debt to income ratio is. They don't know if you have child support, if you have a lawsuit and liens you have to pay for, if you owe the IRS money. That banker knows absolutely nothing except for what you told them as the buyer, right? So that's why we can't deal with that. So then let me pull up. I have a couple different pre-approvals for you guys. Here we go. I really wish Zoom would share like Google Meet does. All right, we get through these agreements and I have pre-approval coming up. I have a couple different ones. I just took people's names off of them so we weren't, disclosing people's financial information. Boop. All right. So sometimes pre-approvals are a little colorful. They look like something made in Canva. This is a legit pre-approval. Trust me, when I looked at it, I said, what in the world? And it's from Movement Mortgage, right? And it's going to have some terms on here. You're pre-approved. Hey, John Doe, here's your loan terms. Address. This is important. Why is the address important for the lender to know when given a pre-approval, or at least the county or roundabout area? Why is that important? Come on, you guys know this. We've talked about it.
Because of the taxes.
Amen. Taxes go into people's mortgage payments, right? And it adds to the monthly payment and the overall amount being paid, especially that first year, right? So if someone is looking at a house in the city of Philadelphia and then doesn't find what they like and then takes their pre-approval and thinks they're going to go out to the main line and be able to afford the same amount of house, not true, because the taxes are astronomical out here in Montgomery County, right? Compared to the city. So that's important. What type of occupancy or residence? Also super important. The same approval someone gets for their primary residence is not the same for an investment property. An investor who gets a pre-approval or financing for a residential 1 to 4 unit property is not the same as if they try to go get something different. So the pre-approval is for a specific scenario, not just a buyer, and they can't just run amok with it. Does that make sense? Loan type, it's going to be conventional, FHA, VA, rental loan, home rental loan, a construction loan. This is also important because not every house can get approved for FHA financing because of the condition, right? Also, VA loans or pre-approvals have that really crazy inspection that comes with it as well, an appraisal. Property type, we just touched on that. This is single family. Purchase price and loan amount. Now, on our agreements of sale, when we're entering offers, it asks us for the LTV. Now, do you see the word LTV and a percentage written out on this form anywhere? No. So you know what happens? You guys call me and you're like, "Coach, I don't know what the LTV is." And I'm like, "Pull up the pre-approval." And you say, "It's not on there." And I'm like, "Okay, well then what's the purchase price?" And I say, "What's the loan amount?" And you tell me, and I say, "Divide the loan amount by the purchase price." That tells you your LTV, which for this is 90%. So that means this person, if the LTV is 90%, meaning they're going to get 90% of the purchase paid for with the mortgage financed, what percentage is left they have to put down?
10%.
Yeah, you guys had breakfast and coffee this morning. I am loving it, right? So let's look at another one. Here's some disclosures. Here's one from Rate. This is a VA loan. VA loans, they can get 100% financed. That's why veterans like that, because that means a lot less cash out of pocket, right? They get 100%, no down payment, zero. Let me tell you what they don't talk about to veterans, which is why even though I'm a veteran, I refuse to use my VA loan because that VA funding fee that they wrap up into the cost of that house is ridiculous. Like Mine was going to be $16,500 added to the cost of the house just for me to use 100% financing. I said, oh, no, 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 I'm not doing that. Right? Didn't do it. So here we go. Again, offer price and loan amount. It's 100%. Loan type, the term, 5 years. Prepayment penalty. This is also important. Can we pay the mortgage off early to beat some of that interest? Yes, you can. You won't get in trouble. Who's it for? It says what they've reviewed, conditions they have to meet in order to get this. And then it's got one of our favorite lenders, Jason, on here, right? And then you have some disclosures. All right. Oh, sorry, you guys are putting stuff in the chat. Text. Oh, it was missing. Okay. Let me go over here to the presentation. So now the next, you guys go to get under contract. And what do I say? You need a loan estimate. Also, buyer's estimated cost sheet. Why is this so important? Why do you think the office makes it required in command?
Make sure they can afford it.
Well, yes, it is. It is making it abundantly clear how much the monthly payment's going to be, how much they're going to be spending in interest, what part is going to taxes, insurance, and also all the closing costs that are going to come up for the purchase of that specific property. Right? So it is, you guys got a little cheat code because I brought up the wrong presentation earlier. It's that cost clarity. Being as transparent as possible is what helps you build rapport, right? And helps build that trust with your client. Charlie, your hands up, dear.
Yes, I wanted to ask something about the pre-approval. I didn't get to raise my hand quick enough. What do we do with that? As long as they have that paper, that's fine. I did hear you mention something about contacting the lender. Do we have a conversation with the lender about this?
Yeah, so every single document that you need, you have to have the pre-approval you need a copy of because you have to send it in when you're submitting an offer for a buyer. It has to go with the offer documentation, right? So that seller knows that this is a viable buyer, right? And so all of your if it were me, because again, I can't tell y'all what to do per se, I can just strongly suggest. And for the Tess Adams team, I tell my agents, and for my personal deals, every single document gets uploaded into my DocuSign transaction room so that it is kept in a cloud somewhere because I don't want that stuff on my personal computer, slowing down my computer, getting rid of my memory and my RAM, right? So every single thing. When I've had transactions where they get a little sticky or a little hairy and people are having some terse dialogue via text or email, I am printing my emails to PDF and also uploading them into DocuSign because I know exactly where to go to find everything I need for that transaction. So pre-approvals, loan estimates, if they're getting gift letters, if there's a little bit of crazy communication, addenda, everything should be in your DocuSign transaction room. And then if you're a Keller Williams agent or EXP or whatever transaction management system that your brokerage uses, you need to make sure that the compliance required docs are uploaded there. And you do have documentation that you need to complete your deal that's not necessarily required. So you should probably always have more documents actually in your DocuSign transaction room or your .loop or your DigiSign or whatever you use versus what actually has to get uploaded to compliance. It's all necessary. Just some is required for the office and for you to get paid, and some is just necessary to get the job done. Does that make sense?
Yes, it does. But I was saying, do we have to confirm or verify this pre-approval? Do we have to contact the lender about it, or as long as they show
Charlie, if you're working with someone and they give you like a Mickey Mouse or fake looking pre-approval, but like the ones I showed you are from the company and has the lender's name. Now, I do call the lender not to ask if the pre-approval is real because that can make people a little offended. But I do call the lender and introduce myself and say, hey, I am the agent for John Doe. I received your pre-approval. I just wanted to introduce myself and, also, establish communication, or you can ask and say, hey, do they have enough saved up for closing costs, about how much do they have? Because the buyer might not tell you directly, but the lender will, so that you know exactly I need to write your offers and what they can actually afford. So you're not wasting time, right?
Even if it's our lenders, like say if they went through our lenders like Chris, we should still give Chris a call.
Yeah, I mean, and if you establish the connection, you don't need to. But
Okay.
if you just get a buyer and they're pre-approved by someone you didn't recommend and you don't know, I'm definitely calling. I call the buyers lenders when I'm the listing agent for my seller to make sure they're a good buyer before we pick their offer. It's called doing due diligence, right?
Mhm.
Yeah. So this loan estimate, also called buyer's estimated cost sheet, is issued after buyer is gonna finds a house and applies for a mortgage, right? Some lenders will run a estimated one for you, a loan estimate up front when you're putting the offer in. Some will make you wait until their offer gets accepted, which is very annoying. That's why I have to use that B $ icon in the MLS to do your own little buyer estimated cost sheet sometimes, right? But it's going to include all the things we just discussed: loan amount, estimated payments, which is principal, interest, taxes, insurance, plus the closing costs estimates, right? Some things we're going to look at in just a second when I pull one up: interest rate and APR, origination charges, taxes and fees, estimated cash to close. Here's where you guys mess up a little bit. Realtors often jeopardize deals by failing to thoroughly review loan estimates with buyers, leading to issues with closing costs, loan types, and monthly budgets. Even though our buyers are adults legally, even though they are responsible for the contracts they sign, they will just sign whatever you send to them and they're not even reading it. Somebody tell me why. Why would an adult do something that crazy? Why would they just sign a document their realtor sent to them without actually reviewing it and knowing what they're signing?
They trust
You.
Wait,
Trust
They
your
probably
realtor.
putting their trust in you, thinking that you're not going to send them just anything. And then I mean,
1000%.
yeah,
1000%.
there's a
Because
lot
they're
of people do
trusting you
that.
because why? You are a licensed professional. And the whole reason why you have to take that class and all the ethics they make us do is because you're supposed to be conducting business in a transparent, ethical way. And it's actually your job not to sell houses. It's your job to protect your clients and their decisions and their money. So that's why it's so important that you are reviewing the forms and you know what you're asking these people to do, and that it's your job to make it clear. They need to know under no uncircumcised circumstances, there should be no doubt, there should be no gray area, no fogginess, clear, right? And so you guys mess up when you don't make sure they understand what they're getting themselves into. It's not to scare them, it's just to make sure they know what they're doing, right? The whole cash to close things. Do you know how many times that I've had agents in the past get their buyer to closing and they're sitting down at the table and they're like, the title officer goes, "Oh, did you guys bring your check?" And they go, "Oh, I didn't know I had to bring a check." What do you mean? So by the grace of God, most of them do have enough money, and then we got to delay settlement and wait for them to run to the bank and come back. But there's been a few times where they were under the impression that because they got some sort of seller's assistance, that means they had no closing costs and they were just going to show up, sign paperwork, and leave with keys for a house. That is due to gross negligence on that real estate agent's behalf, also on their own behalf, but you're getting paid and you're supposed to be getting a commission for a reason. That's how you earn it, right? So ignoring, also not picking up on these things, which we're going to look at, ignoring high lender fees and costs, overestimating your buyer's budget, miscalculating the cash to close, choosing the wrong loan type. So not understanding what loan type might actually be better for a certain property or scenario or client, skipping lender verification. And this is Charlie, you assuming a pre-approval letter is solid without checking if the lender is reputable or if the buyer's finances have actually changed or been checked, right? So to avoid these, you got to go through it. So
Hey,
let's,
Tess,
yes, ma'am.
question for you. So are we supposed to suggest what type of loan they have, whether it's conventional, FHA, or anything?
I don't suggest that. I do suggest what lender they should work with.
Okay.
So that because I have built a rapport and a level of trust with lenders over the past 10, 15 years in between that time frame, right? And so I do suggest that because I've experienced it myself and I'm well versed on the VA loan process, If I know that my client has a certain amount of money or is in a certain financial situation, I at least tell them to explore what a conventional FHA loan scenario will look like compared to their VA loan. Or, I go through scenarios like that, but I let the lenders do the lender's job, right? And I stay in my transactional real estate phase. Do I give suggestions? Yes, but I always say verify with your lender.
Okay, so can you go back to what you just scrolled through? What did
Yeah.
that say?
Well, this was oh, you mean on the presentation?
Yes.
Yeah. Yeah. This is not for, you don't have to do this. You need to make sure the lender has done that.
Okay, thank you.
Yes, yes. Choosing the wrong loan type. And also you can, though, if you're showing houses to an investor and for some reason they swear they're going to use the FHA loan, but the house is dilapidated, they're not getting FHA. So you can cancel that. You can cancel their hopes and dreams and make them more realistic while you're at that house. And you can say, this house will not be approved for an FHA because the paint is hanging off everywhere and there's no appliances and there's a big hole in the roof. Do you see what I'm saying? So it's having like a level of discernment and understanding your role that way. You cannot force people and you got to let the lender tell them, you know what I mean? Sometimes, but you're going to know on site if something's going to work for a certain type of loan product, right?
Okay, thank you.
So would that be a non-QM or a conventional loan?
Well, that depends on the person's financial background.
Mm-hmm.
Yeah, the non-QM depends on the person's financial, like where their income's coming from and how they're set up, right?
Mm-hmm.
All right, hold on. I want to make sure okay, we're going through here. Pre-approved, let me get back to the less estimate, right? So here you have loan amount, loan terms, max LTV, interest rate, principal and insurance payment, estimated taxes, your HOA dues if they're in. So this is giving you the more specific fees and charges and what they're going to be paying for with their monthly mortgage payment and cash to close. And DB says if you have disability rating, you don't pay funding fee for the VA loans. Exactly. And if in DB you're lucky enough to get one of those, because I'm here to tell you, I literally got shot when I was 19 years old while being active duty, and they tried to give me 10%. Still fighting it 20 years later. So yes, but if you're lucky enough to get that, you will not have to pay a funding fee. Yeah, wow. That's what everybody says when I tell them that. And then it again says no prepayment penalty. That's a big thing. And it gets into the nitty gritty here. It tells you what the borrower needs to provide to get their approval, right? And there's another one. I think I have another loan I missed. Oh, no, closing disclosures next. All right. It has all the pertinent information that they're going to need.
So, Tess, when do you get this? After the pre-approval, before?
So that's what I was just explaining, where some lenders will be nice and give you a loan estimate prior to putting the offer in. They will kind of help do that if you have first-time home buyers or buyers that are like little scaredy cats. They might be getting cold feet. They're scared. It's their first time spending this much money, and they really need to see every detail, right? So if you have a really good lender, all the lenders I work with give me loan estimates whenever I ask for them, which I really appreciate, right? So, and then other lenders, especially if you're working with a bank, they have like strict guidelines and processes they have to follow, and they will not provide a loan estimate until they're actually under contract. So if you're in a situation where you can't get the loan estimate before you're putting your offer in from the loan officer, that's when we go to Bright MLS, which I just happen to have up, and you're going to use this $$ icon, and this worksheet pops up. And then you can put in your best estimates for fees. It will already populate taxes and stuff, and then you'll go through and put your fees, and you can get their interest rate and stuff from their pre-approval. Okay.
Yes, thank you.
Yep, no problem. All right, I'm running out of time. Okay, let's do closing statement, which is you got through your transaction. So we got our buyer pre-approved. We went house shopping. We found them a house they love. We wrote an offer. It got accepted. We worked through all the contingencies, and they got their mortgage commitment, and everything is good. And we've made it. And now we are at least 3 days before settlement. and we're getting Alta statements. Now, some people will show you their age because they're going to say HUD document, or HUD 1, or closing disclosure, because different people use different terms. It's the closing documents. It is the final statements of debits and credits and who's getting paid what for what and terms and all that, right? So they all don't look the same, but it's the same idea, right? And so this is the final document that lists all of these things. It shows actual costs versus estimated. It will be very clearly written. And it will be the legacy of mortgage transparency. So if anything looks funny on this Alta statement, you need to bring it to everyone's attention, title, lender, what have you. It's going to have some obvious things: purchase price, loan charges, credit debits. The Alta is the truth. It's what's really going to happen when you have that prelim one and you're reviewing it before settlement. And then after it's signed, it's what really happened at closing down to the penny. The number one mistake the realtors make in regards to their buyer clients' Alta statements is, what do you think it is?
Not reading it.
Girl, Charlie, you are my not auditing and reviewing it, not looking at it. Not looking at it, right? Let's look at one. Here it is. Closing disclosure. Loan amount. Their interest rate. Monthly principal and interest. No prepayment penalty, no balloon payment. Now let's break it down. This is not their mortgage payment. This is just the principal and interest part. This is their principal and interest. Excuse me, I have hiccups. And then estimated escrows. Escrows are property taxes and insurance. So this is how much they're paying for their house. That's their mortgage payment, right? Now it's even making it more clear. Property taxes, homeowners insurance, and escrow. Yes, yes, this is how much a month of that payment. Total closing costs includes loan costs, other costs, and we're gonna get nitty gritty in a second. And they got $150 in lender credits. You know what's so crazy? Cash to close. Do you see that it's negative? Do you see that they are getting a check at settlement? I know you guys hear me talk about this, how I save my clients so much money and they got a check at settlement. I'm showing you in real life this happened, and this just happened a couple months ago with a PC agent.
Okay.
Okay. That's what we're talking about. I remember I told you we are Nordstrom's and Saks Fifth over here, not Walmart and Target, okay? So now we're going to get into borrower and seller paid by others. It's breaking down who paid for what. And we have at closing, before closing, right? So it gets into, here's your appraisal fees. These can vary. I've seen them $450 all the way up to $750, right? The inspection fees, because they had to have a second inspector come out. VA funding fee. Here's that crazy thing I just told you all about. Right? Seller paid for credit report and their ID verification. Seller is paying for inspections. Right? Then we have title insurance, all the things. But you see, it breaks it down line by line, and I'm running out of time, so we're not going to talk about these things. But it's important that you go through. And I will just tell you right now, these fees, Atlas endorsements, that's for title, that's a regular courier fee. This is one of the, you see how little it is, $30? I can accept $30. I've seen this at like $250 before. And I'm like, no. So these are little things you need to pay attention to. If it looks astronomical, go ask. And you can ask. These things right here are negotiable. You can tell them to like go somewhere else with that, right? Title insurance is not negotiable. E-doc delivery fee, I've seen somebody try to charge like $50 for that. $850 I can swallow, that's fine. Lender's title, you're not really dealing with that. Notary fee, $100. Tax certification and wire fee. Fair enough, right? Then we get into taxes. These are prorated, right? And I actually have a little calculator I'm going to share with you guys, so it's helpful, so you can put in the days and stuff like that. Your homeowner's insurance, you can just verify that this was the same as the estimate they were given before settlement by whatever insurance company they're using. Prepaid interest and property taxes is prorated. You kind of know what that is up front, right? All these fees. Again, another notary fee. This is paid on the seller side. Here's the real estate commissions. If nothing else, I would expect you guys to at least be checking to make sure you're getting paid appropriately. Do you know what kills me? When you guys have settlement and then the DA comes through and after it's 2 days after settlement, you done turn your check in, the accounting department sends an email to us saying how much we're getting paid. And that's when you say, oh, that's not enough. I charged X amount. Too bad, so sad now. You were supposed to say that and correct the title company and the lender before you settled. You're not getting that money now. It's done deal. Done. And guess what that does? I said, oh, they did not check that closing disclosure. And don't try to blame it on me. There's 126 of you guys. I am not going to remember what you guys charge your clients way back at the beginning of the deal. At the very least, you have to do that. Now, if I don't see any fee, if I see a zero or I don't see you getting paid, I'm going to say something. But I'm not going to know the finite details. That is on you. And if there's something wrong, you can tell me and I'll help you get to the person that needs to fix it, right? And they're paying some bills. You'll see bills here under other, whenever stuff needs to get paid at settlement, right? And then it tells you all the cash to close, pertinent parties to the deal, all this other extra information, disclosures, if you will. And then this is why you always have to give your license number, because that has to be on here. All the parties, right? Again, clarity equals trust. Transparency equals trust. You guys reading these documents and read them before you get the client. Some of you have not, like I know Charlie's been showing some houses and doing some things, but she hasn't gone through a buyer's transaction yet. If I were Charlie, I would be reading these now and highlighting something. If I have a question, I don't quite understand what it means. And that's when you email me or whatever, or ask me when we have class tonight about what's going on. 88% of buyers used agents. So that means only 12% of real estate transactions are happening without a realtor. 76 of first-time buyers value agent explanation of process. So people want to be educated. That's why you're here, right? Yeah, these are fantastic stats. This is called job security, right? Only 12% of deals go through without an agent. You know what's real crazy? A high percentage of that 12% is probably self-represented agents that are just doing the deals as investors off the market. You know what I mean? And then this is huge. 76% of the people want you to be educating them. That's your job. They want it. They rely on you more than just MLS access, unless you only make yourself a door opener and an MLS access person. If you do not provide this value and you do not educate yourself so you can pass that along, then you are just a door opener. You are just access to the MLS. Liked it, loved it, hated it?
I loved it. It was good. I have
Good.
2,000 more questions,
Loved
but
it.
Yeah,
I got a couple.
I loved it too.
Here, let me stop recording so that the class